Hi, my name is Bill Westmacott. I'm the founder and president of Fivefold Financial. And today I actually have a very special guest with me, Mark Taucar. And he's coming to me all the way from Toronto, Canada. Mark is the senior portfolio manager at Excellent Capital Management. And he has over 22 years of experience managing clients' money. Mark uses a sophisticated model that he actually created himself to manage clients' wealth, and he focuses on protecting clients' money with risk management and hedging strategies. So, without me saying too much more, Mark, why don't you tell me a little bit about yourself and your career path, and then how you ended up at Excellent Capital?
Absolutely. Thank you very much for the opportunity to speak with you. So essentially, I started in the business back in 1998, as many people do, within a large banking organization, and evolved from there. I guess you could call the food chain and natural evolution of someone in this career path into personal financial advice, and grew to be or evolved into a stockbroker and helped people directly build their portfolios. And then from there, decided that we needed to take the servicing of client accounts to a higher level yet. And I pursued the Chartered Financial Analyst designation and attained that in 2003. And from that period forward, I've been working in this industry as a portfolio manager, building client solutions with various companies. And actually about 5 years ago, amalgamated what our platform is with Excellent Capital Management to provide a level of discretionary portfolio management service that arguably we haven't seen in the industry previously, where we have a combination of both private equity and public market products in one combined portfolio. Dan Pembleton, the president over at Excellent Capital Management, and I work as a partnership on Excellent Select, which delivers those services to referred clientele and direct clientele.
Hey, that's awesome. Well, thanks for sharing a little bit about your career story. I always like to learn a little bit about what are you passionate about outside of managing clients' money. I know you take that very serious, but what do you do beyond managing money?
Yeah, you know what? When I have the time, I like to actually compete in triathlon.
Okay.
So I've been a swimmer for as long as I could remember. Enjoy swimming, and that kind of blossomed into getting on a bike and riding 50, 60, 100 kilometers at a time. And then I was just introduced to triathlon about 5-6 years ago. So enjoy doing that. I've competed in a couple of events across the country. And hopefully, if I remain healthy, we'll continue to do so.
Hey, that's awesome. Thanks for sharing that, Mark. I just want to get a quick overview of how would you define your investment management style for clients? And then I want you to briefly just talk about the difference between passively managed money, which I know you've done in the past, and now your more active management style, and what the differences are and advantages, I guess you could say, the pros and cons.
Great question. You know, earlier on, what I discovered is, as a portfolio manager, what you need to be able to do is manage from a risk-first perspective. Yeah. And so management really starts not necessarily at selecting securities and good securities, but it starts with understanding who your client is. And that means understanding where they are, where they need to be in the future, and then shaping the end portfolio, the prescribed portfolio, based on what their risk tolerances are. Yeah. So we do real deep dive into identifying who the client is from risk capacity, risk willingness, and finally their risk need. And if we were to distill those down, fundamentally what risk capacity means is a client's ability to take a shock immediately to their portfolio without encumbering or impairing their retirement. Risk willingness is essentially their sleep factor.
Right.
So we want to always know that even though someone may have a very high risk capacity, that they can go to sleep at night knowing that the volatility of their portfolio is not going to keep them up.
Okay.
And ultimately, it's upon us as their portfolio manager to really determine what the need for risk is, because we do have many people who come to us who've attained their investment objectives, and they might not need to assume a level of risk. Now, in terms of the passive and active, what we focus on here is what we would refer to as a factor-based investment model. So what I do is I look for securities that have key fundamental factors that have determined that they perform very well. So historically, we know certain key fundamental factors are great indicators of future performance when we identify these stocks. And so that I would refer to as more of an active strategy, because what ends up happening is this model runs on a daily basis. We identify certain securities daily that would work within that model. And certainly some of those that have already been selected fall out of that particular model because we also have thresholds that need to be maintained. And so when a stock drops in any one of those fundamental factors, we have to make the decision, an active decision, to replace them with stocks that would otherwise appear. Now that's the exact 180 from what would be referred to as a passive strategy, in that what we'll do is we buy a basket of securities and simply maintain that basket of securities despite what's happening in the markets, whether the markets are going up and we've made substantial gains or they've lost a significant amount of money. Then we would just simply look to buy more of that, irrespective of what's being held in that basket of securities.
Oh, well, thanks for defining that, because I think it's really important discussion piece with clients, because based on my experience, the vast majority of Canadians are in passively managed money. Let's end our discussion, Mark, kind of transitioning. So we're at the end of May 2020, and I'd kind of like to get your perspective on the economic outlook, where we are in financial cycles, and just briefly kind of touch on the things that, if there's anything keeping you awake at night or things that are concerning you, share that with prospective clients.
Yeah, undoubtedly, May 2020, we're in, I wouldn't call them necessarily very dire economic circumstances, but we aren't in the best of economic circumstances. We are in a recession. We are starting to see unemployment numbers creep on up. Arguably, there are some economists out there saying that we are in a depression era level of unemployment. And that's all based on, on the heels of the COVID-19 pandemic worldwide. Globally, I think what's ending up happening here is what's worrisome is the level of fiscal government spending that's taking a lot of government balance sheets and heavily positioning debt, a lot of deficit spending. But on top of that, where central banks around the world have kind of thrown out good economic policy just to flood the markets with as much money as possible. Now, this might seem to be an effective policy in the interim to bolster the economy in lieu of what the effects of COVID-19 have brought on to us. But long term, I think what you're going to be able to see here is inflation creep back into the system, which doesn't bode well for many investors and certainly retirees who are dependent upon a cash flow stream. So we have to be very vigilant as portfolio managers right now to allocate to portfolios that can withstand a shock to cost of living, and ensure that we're also mitigating the risks of further downdrafts in the market with a second or third wave of COVID-19 pandemic.
Well, thank you, Mark. I really do value your time, and thank you so much for spending a few minutes with us. And I look forward to maybe we can do one in 6 months or a year from now and do another follow-up one. And but thank you again, and I wish you and your family a great spring day in Toronto. And we're getting a little bit of sunshine here in Chilliwack, BC, which is nice. So thanks for your time, Mark.
Excellent. Thank you very much, Bill.
All right. Take care.